Most homeowners don't realize it, but they're sitting on the most equity that homeowners have had ever in history. So today we're going to talk about these things over here, but I'm also going to talk to you about how maybe being a good steward of your money with a refinance might help you out. So can you take that equity in your home and maybe use it to pay off some debt? Well, that's what we're going to talk about in today's video. Does it make sense? And how do you do it if you want to look into this? So folks, my name is Dan Frio. I come in each day to explain to you guys what in the heck's going on with those and why. Well, today we're going to talk to those homeowners out there that are possibly looking to refinance, but does it make sense to refinance and maybe pay off that debt? I'm going to show you some tools here that you can use today. So without further ado, folks, let's get to today's video. So here's what we're seeing in today's rates. We had rates go up just a little bit yesterday. I don't really think they're going to move all that much today. I actually don't think they're going to really move that much in the next few months because there's really no news coming out that really should affect these things. So let's get over to see why are so many people refinancing right now. Well, let's look at it. If you bought a house in the last few years, you probably have a rate in the 7% range. Well, today it's in the 6s. So you probably save a lot of money there. This is a time of year too, if you look to refinance, you might be able to skip 2 mortgage payments. Yeah, 2 mortgage payments. And then on top of it, people have the most equity ever in history. Now, I'm not a proponent of putting more debt on yourselves, but what I am a proponent of is being a good steward of my money. So why pay interest rates that I'm going to show you here in a second that might be 20, 30% interest rates and put it onto a mortgage that might be a fraction of that. So let's look at today's video, what's going to go on with interest rates. And then I'm going to show you guys some tools that you can use to see if refinancing actually makes sense to you. So what we had coming out today is on the economic news, we had PPI, the producer inflation numbers. Now, I watched all the reports and I read them and I'm sitting here scratching my head saying, okay, what am I missing here? So here's what Bloomberg calendar has for us. So I'm going to go through this with you. Then we're going to go over to the bond market because that calendar kind of really drills into what's going on. And I'm also going to show you the direction on where bonds are going today as well. So the numbers that we were looking at today, we saw yesterday when we got the consumer inflation with the CPI, it came in really good. Okay, then I'm expecting, the PPI number, I really don't know how this is going to go because I know oil and energy is coming down, but there's a lot of other components, labor, insurances, health insurances, believe it or not, come into play in this things. So I'm thinking, okay, what's the PPI going to do? So let's break it down. So the numbers are kind of skewed. I'm going to give you just the briefing here, and then we're going to look at the real numbers. On the core PPI, it's saying in October. Well, we don't want October. In November. Well, let's get over to this calendar right through here. So this is Mortgage MBS Live. If you want to subscribe to this thing, I think I have a discount code down there. If you're a mortgage loan officer, it's a great site. But here's the news we have today. So let's get over through this. We're looking at PPI, the producer inflation. It's right here. Okay, so the last reading, they were expecting it to be at 2.7. It went to 3. So that means on the producer side of the equation, costs are going up. Let's see if we can find the month over month. So on right below it, we have month over month. It was 0.2. Now it's at 0. So if I look at this, I'm just going to say, to me, this is a net neutral. So if I go to the bond market, this is what we look at to figure out what's going to go on with mortgage rates right through here. You're seeing it. The bonds aren't really doing anything. So if you're new to my channel, here's what we read on a daily basis. We do go over mortgage rates, and I try to explain to you guys why they're moving. But really what you focus in on is right through here. This is actually a mortgage bond. If you look at the top, it says MBS. That means it's a mortgage-backed security, mortgage bond. So what you follow here is kind of the opposite of what you normally follow. So when you usually follow a chart, especially with mortgage rates, you're like, okay, up is bad because that means rates are going to go up. Well, you're looking here at the price of the bond. So what you need to do is if the price of the bond goes up, that means rates come down. So we want the price to go up. Well, you're going to see after the news that came out just now, we basically went from up a couple points to basically back down to 0. So the effect of today's news really isn't affecting mortgage rates right now. So let's get over to the bond market, the equity markets, and see how they're doing. Well, the first thing we want to look at is credit card rates. That's in the news right now. President Trump's coming in saying, hey guys, can you cut rates to people down to 10%? And a lot of the banks are saying, no, this will kill us. But let's kind of look at these things. Here's today's economic news. We had bank earnings coming out today. Bank of America tops estimates, better than expected net income. Citibank tops estimates as loan losses provision come in lighter than expected. And it goes on and on and on. So they're making a lot of money. Yeah, I agree with you. But let's get over through here. Here's the earnings reports for this week. Now, ironically, the bank's earnings are coming in. So yesterday, we had JP Morgan and bank, whatever these banks are. You can see right up through there, their earnings per share really did well. If you go to today before the bell, everybody, what you have to do is just look behind my head. If it's a green or hard green, it means they met or exceeded earnings expectations. So they're killing it right now. So let's get over to this piece. Okay, so why are credit card rates so high? Well, some people deserve it. And I hate to say it that way. So let's go down through this chart real quick, just so you understand how credit scores work as well. So the goal is to get your credit scores 720, 740. Now the new goal is 780. So try it out. Check out creditscoresandmore.com. It's a website I created. I think one or two links aren't working. I tried to get in there yesterday, and I'm working on fixing that. But here's what's happening. If you have excellent credit, you might get a rate of 18 to 24%. That's for excellent credit. Now, if you have poor credit, subprime credit, it could be 30, 35%. But here's some of the reason why. They have a lot of losses. Okay, there's a lot of fraud, and a lot of people buy a lot of stuff and never pay it back, and thus you get down to these credit scores down here. So maybe if you're down in this range and you don't pay your bills, maybe you should deserve a higher rate. But if you have excellent credit, you imagine paying 25% on your credit card? It just wanted to make sure you guys were aware of that. So the next thing is we have a calculator for this. So let me talk to those homeowners out there to try to figure all this out. If you're sitting on the sidelines right now and you're like, okay, should I refinance? Well, first thing I need to do is go to our website. It's right through here. It's called the Rate Update. What I did yesterday, and I just launched this thing, so bear with us, it is called RateWatch 2.1 AI. So what happened was when the rates come down, and they dramatically dropped on Friday, we just got bombarded with triggers. If you put in your information, I apologize. We're working on this. So it was inundating because I track these personally. I do. So what we ask you to do is put your mortgage information in there and then put in their interest rate you'd be interested in refinancing or how much you want to save, and I'll reach out to you. We don't sell the data, but I couldn't keep up with demand. So what I did is put it in AI. It launched yesterday, and we've got hundreds. We've got hundreds of people in there. So put your information in there. Don't be surprised if me, Alan, or Tony reach out to you and say, hey, your trigger, it just triggered. So that means your rate is in line. Let's look at the numbers. And we'll go over your payment, what the costs are, what the break-even point is. If it makes sense, we'll do it. If not, we'll just lower your rate on here and we'll contact you down the road. But let's say maybe you have some other debt and you're like, okay, my house appreciated a bunch. So what should I do? Folks, I'm not trying to get you in any more debt. My goal is to help you understand how to work with it. So go to this calculator. We have it down below. There's actually 3 down below. What I did is my son created these. So click there. They're actually free at this point. You can donate some money. He spent probably 50 hours plus working on these things. So donate some money down there to help him out. But this thing is awesome. You're going to put in your information, and then you're going to click it. You're going to put in your debts. You're going to put in everything, and it customizes it exactly to the loan you want, lets you know your savings and everything else. I'll try to demo this and I'll launch this out there. But you're going to see that this is an amazing tool to help you understand your finances. So please check it out. Go to our down below. We'll have the calculators down through there. So now let's look at some of the data that has come out in the last few days just to see are rates going to move. So folks, I launched my 2026 mortgage rate forecast yesterday. I don't really think mortgage rates are going to do anything. If you watch the bond market, not doing anything. You watch the economy, yeah, there's ups and downs, but everything is flat and flat as a pancake. So if you're out there paying, maybe like a 7% mortgage rate, check and see. We even have other calculators down here. How much does it cost you for waiting for even lower rates? You might be surprised. You're losing a lot of money because based on this data, and we'll go over here in a second, there's really no reason for the Federal Reserve to cut rates. And I'm going to show you today how probably the odds went up a little bit more after today's numbers. So here's what the Federal Reserve does. They manage that number over there. That's the federal funds rate. Basically, it's interbank lending. It doesn't really pertain to me and you. They don't set mortgage rates. They don't set car loans. That's set by those banks that are making a lot of money. But here's what they look at. They look at inflation and they look at the unemployment rate. Well, the unemployment rate recently went down. It went down. It's getting better. But the inflation numbers, that's where it's sticky right now. So now what the Fed's going to do is they're going to pivot and say, okay, the employment numbers are looking good, but now that sticky inflation isn't going anywhere. So there's no need to cut rates. So if you go over to the FedWatch tool, this is created by the CME group. That's the Chicago Mercantile Exchange. It's saying in 14 days, the Federal Reserve is going to do what? Now, this was 95 yesterday. I can almost guarantee it's going to be higher today, and it is. So it's a 97% chance, folks, the Fed's not going to do anything. They're not going to do anything at this meeting. They're not going to do anything at that meeting. They're not going to do anything at that meeting. So mortgage rates are basically flat, and they're here to stay. So try to pick your spots, have us work with it, and they use our AI system to track mortgage rates for you. But even if you're out there looking to buy or build down the road, what should you do? Well, here's my expectations. I don't really think mortgage rates are going to do much of anything. So you're in a good position. They might drop a little bit, or they might go up just a little bit. That's why my expectations for this year is rates are going to be between 5.875 and 6.25, and we're right in that range right now. So if you want to take advantage of these rates to see if you can refinance, or if you're out there trying to figure out, can you buy? We've got calculators for you guys down there as well. The calculator down there actually will explain to you what programs you would qualify for, and you can actually customize it to see which one would work best for you. But if you need help with this, just check out the rateupdate.com. Schedule an appointment with us, ask me a question right over my head, or even give us a call. It's most likely me, Alan, or Tony going to answer that phone. We're going to just answer any questions that you have. And hopefully once you talk to us and once you watch this video, if you're a homeowner, maybe a home buyer, even a realtor loan officer, you understand a little bit more now about what in the heck's going to go on with those and why. So thanks for watching today, folks. If you need some help with a mortgage, please reach out to me. I'd love to help. Otherwise, please make sure you subscribe over there so every time I post a video, you get an alert. And there's probably a bunch of videos you like. And if there's one that comes across it doesn't really tickle your fancy, just skip it. But subscribe over there, because over the 6,000 videos I have, guarantee there's something out there that's going to help you learn a little bit more about real estate. So thanks for watching today. God bless. Have a fantastic afternoon. I'll be here at the closing bell today to let you know how this mess ends for the day. Thanks for watching, folks. Have a great day. Bye-bye.